Hi, this is Randy Finney with Right Side of the Chart, and today is Monday, October 1st, 2018. Poured through the charts over the weekend, studying indexes, sectors. I already did a video on that earlier. This will be a relatively brief video. I just wanted to share about, looks to be close to a dozen long trade ideas that stood out as I was going over the charts last night. I'm going to continue to pour over the charts this week. Keep in mind we have earnings season coming up soon, so I'll probably lean towards any official trade ideas being ETFs, sector ETFs, commodity ETFs, something that's a little more diversified. Um, but I do want to share these individual stocks that you always get much more bang for your buck trading the most bullish and bearish individual stocks than you do trading sectors. Of course, like I said, earnings season coming up. You want to check, scrub any positions you take. You don't want to take a stock a day or two before it reports because then it's a crapshoot. That can go either way. With that being said, let's just dive into the charts here. This one is a gold stock. This is a low price, high risk. I'm adding a trend line here as I'm doing the video that I didn't have in the chart annotations that I made last night. Um, in this video, you'll see the majority of trade ideas are going to be either shippers or gold. That's where I'm seeing the developments lately. PGLC, that's Persian Gold. Now, low price. This stock just recently went under $1 a share. That's very dangerous stocks. Usually, when they get down to under $5, especially down under below $1, they face delisting requirements, everything else. But sometimes you'll see them punch under $1, snap back up, and that can be quite bullish. So again, anytime you're trading a stock in the $1 range, especially below, keep the risk in mind that, and I don't know, you'd have to look at the fundamentals of this company, but very often you're running an elevated chance of a bankruptcy filing coming out of the blue, in which case your stock would gap down easily, 30, maybe 50% or more, where it'll just blow past your stop. So I cannot impress that enough. But if I didn't think the potential wasn't there, then I wouldn't share the trade idea. So risk and return go hand in hand. In other words, take a tenth, 1/10 size position if you're interested in this, or whatever your risk tolerance will allow, if assuming it's suitable for you. So there's a downtrend line. This 133 level is a pretty key level here. You can see the reactions there recently. That's been capping. We had a couple of attempts, starting to see some volatility really coming to the stock. And there's the other thing. These are big swings. You can see these candles over here, and then look at the recent candles like today's. The range on that candle from high to low, what is that, 24% or so? So these suckers can move. Again, you have to factor that into your position sizing, or you're going to be stopped out or stressed out, one of the two or both. If you trade a little low priced, gold mining stocks in general are very volatile, as are the shippers. In fact, those two sectors, other than the cannabis stocks, I really can't think any off the top of my hand that are so volatile where these individual stocks can easily swing 10, 20, 30% in a day. So again, enough on that. I won't continue to beat that dead horse, but if you're new to trading or investing and you don't know what you're doing, stay away from these low price stocks. But the potential on this one, from where it's at now, it's cleared that 133 area again. It's had a couple failed attempts at doing so, but where are we at now? We're at 125 right here. Okay, yeah, we're all the way back down. Faded most of today's gains, but it's still positive. If it can take out that downtrend line and run up here, 180 would be my first target. That's 46% profit. And up here is about 114. The success or failure of this trade will largely hinge on what gold does. So they go hand in hand. It's gold mining stock. Next one up, TK, and I'm going in no particular order. This one is a shipping stock. No, I'm sorry. TK is oil and gas integrated energy stock. There it is. You had a downtrend line right there. You had bullish divergence forming here for a while, just as you had before that. Negative divergence. It marked the highs, and that stock told you to get out at the highs or be prepared for a trend reversal. And there it is. So falling wedge, divergence, breakout. First target's already been hit today. Again, backed off a little off there. I think we were up at one point probably twice this. Looks like we've hit that target for about a 5% gain today. Again, I was teeter-tottering between doing this video first this morning or the other one that I did that actually ran. That video was long, about 40 minutes on the long-term outlook for the market. But With that being said, there's still potential because the shippers they move their momentum sectors. And I'm seeing again multiple breakouts, some bullish developments. So we can this sucker can pop. It definitely has to take out today's highs. Let's see where that is. That was at 709, and I had this line here before that. So it hit my first target to the button today, or the first resistance level. Next one's 757. If it takes that out, I'd have to study this a little further. Yes, let's put a target right here. That is certainly a likely reaction area around 868. So plenty of meat on the bone. If this one, again, you want to see it take out that level or pull back for maybe a back test of the wedge, but there's probably from where it's at right now. Need to grab the bottom of this candle where we're trading right now. If it gets up there, that's about 28%. Even if it gets that 757 level, it's about 12% from where we're at. So the two objective entries on this one would be a back test of the trend line and or break of the 709 level. That's TK. Moving on, let's see, JEN. Genesis Healthcare. This looks like long-term care facilities stock. Here's a downtrend line. This one just behaves very well to the technicals. What I'm talking about here is a pretty well-defined downtrend line, very well-defined downtrend line. Positive divergence at the low. Everything I like to see. Breakout, perfect backtest. Again, it just acts very, very well off the technicals. Not a lot of pierces. Here's another trend line, well defined. Look at all the reactions on this trend line. That uptrend ended in, yes, a divergent high, negative divergence. And now we've come full circle. It's corrected. And now we have positive divergence right here. And I don't know why I didn't draw it here last night. There it is. So I have to say this downtrend line is not very well defined at this point. You had a couple reactions where it begins. You had one reaction there, and we haven't even had a third. In my book, it takes at least 3 reactions on a trend line to validate it because any 2 points can be connected at random. So that's just a potential setup there, but there's also support. So you can buy this one around here, down around the 120 level. Again, low price stock. Buy it at support with a stop not too far below. If it breaks that, it's probably going to go down and test that $1-ish area around, yeah, there's 97 cents is where that support level, call it around $1. That's always a key level. The company will try to defend that $1 share price to avoid a delisting. If it trades too long below $1, most of the time you get delisted. But there it is. So there's your potential targets. A lot of upside potential on that one, but again, very high risk due to the low price on that stock. BTG, another gold stock. B2, this is B2 Gold Corp. And what I'm looking at here is this downtrend line right there. Downtrend line. Don't have divergence or anything because we had this sloppy little brief drop here. Otherwise, you would have had divergence. So you could draw it right there and there with the divergence line like that. Either way, a pop above this level. You do have resistance here around 244. In fact, I could even tell you recently we've been trading right under the 232 level. So it's got some work to do, but again, if the case and the bullish case for gold firms up, here's another low price gold stock that certainly has a lot of potential. These are all possible targets on here. And, if gold, the case in gold that I've been making for a, meaningful bottom, this stock could easily head up to that 355 level in the next, quarter or two, maybe 3 quarters. There it is, about 54% on that one if it does it. But again, pretty aggressive. A lot of these are that I'm going over are aggressive. TK, this is TGP, another, this is actually shipping. LNG, liquid natural gas shipper. TK, TGP again is a symbol. Just a nice, clean, defined downtrend line. A lot of reactions on there. Divergent low, everything I like to see. Boom. Fortunately, I found it last night, not on Friday or Thursday, I should say, because on Friday you had a big breakout. I mean, and again, from my experience, I've traded the shippers on and off for many years. Fewer stocks can go up so fast. And by the way, these things redefine the word oversold, overbought. When they run, they can really run and they can just keep going beyond what most people think they can stop at. I mean, I've seen these stocks do 100% or more in a rally in relatively short order. There was a big move on Friday, big breakout, that green candle. I had a minor resistance line here at 1674 and another resistance level here around 1712, which we actually already we exceeded it today, but that's right where we're trading now. You can see right where my resistance line is. A lot of reactions along that, or several reactions, not a lot, I should say. But I think it can work its way up here if shippers continue to build on this momentum. Probably run up here at 1935-ish level. I don't see a whole lot stopping it. There's a little bit of resistance in the middle there, right around 1810. So there's a possible target. And what I'm going to do, by the way, is I'll dig through more of the shippers. I have several watch lists on the shipping stocks, and I didn't really comb through there. I was just going through a sort of a random watch list I have with all the stocks that I have drawings on. And I was just looking at some of the big gainers and losers on Friday, and that's what put these stocks on my radar. MTL, Metro Pow, this is a steel company. You can see a downtrend line breakout. So this one's already broken out. Now, where to enter is the hard part here. We had a divergent low. Again, I wish I would have found this one 2 weeks ago. See, nice, clean, defined, well-defined downtrend line, positive divergence. Gap, that's an impulsive breakout. When you have a gap, that's comparable, even more bullish than just one big green candle because prices just jumped right up there. So there it is. That was the breakout. Followed through the next day. I mean, just since the breakout, this sucker moves. It went up in 2 days about 30%. Hit that, which would have been my, that target there at 340. You can see all the lines that I have, and pulled back. So here's the thing. It pulled back so far and back tested this 297 support level. Now, yeah, support, former resistance. And another pullback to that level may do the trick. I should probably move on here because it's really ideally I'd like to see this one come back into 280, but if it comes all the way that far back, that's erasing a lot of the breakouts. So let me just make it clear. I think 297. If we can buy it close to 3 with a stop somewhat below, relatively tight, and then hold it and or take a partial position there, add if it can take out that 340 level with conviction or that recent high. It just went a hair above 340. In fact, there's a little, yeah, well, yeah, I'll leave that 340 line there. It hit a high of 342. That was a little momentum fueled overshoot. So we'll call 340 the resistance. And if it takes that out, I think ultimately it can work its way up here. There's a very well defined level around 417. That's where I would be booking full profits. So again, there's your entry points around $3 and or add on a break above 340 for a target of 417. That'd be a pretty good move in that one. NYNY. We were recently short and bearish the gaming stocks, and longer term, I think they go lower. If you want a potential short squeeze play, it would be this one, NYNY. That's Empire Resorts Inc. You can see we had a divergent high right here that marked the high in that stock, and it has since then, that was back earlier in the year, the stock has plunged about 73% off that divergent high back there in February, early February or late January. Setting up not the best defined downtrend line, but it's one you could actually, you have enough reactions there. One, two, three, four, several reactions there. One recently, thinly traded stock. You can tell just by looking at the candles there. But again, this would be more of a short squeeze op above that downtrend line. There's also some resistance right there about 988. You can see that's where it's been tapping recently. So if it can pop above here in 988, that would be your safe bet. Wait to break above 988. They could probably run up to $12, and I would be in and out of that one. In fact, this is the kind of stock that if we get that short squeeze, I would immediately, and I usually do this anyways on a trade, but especially one like this, I wouldn't turn my back on it. I would, if I take it, I would set a sell limit order just below $12 because I think it'll run up there quick and the sellers will step in and it'll reverse. So if it does do that above 988, let's say you're in at 992 and you're out at, it's set it pretty tight there, at least 1190 or so, you're talking about 20%. It cuts both ways. You have to do your due diligence. I don't know what's going on with this company. If bankruptcy is an option because it's certainly plunging, but like everything else, just don't put too much in these aggressive setups. CENX, Century Aluminum. Here's a board I was looking at. Not my favorite, but you can see some divergence there, positive divergence. It's trend indicator. The PPO is still below that zero line. It needs to really get above there, but I have intersecting levels. 1304 roughly, maybe a little higher, is resistance as well as this downtrend line. So there's one if you're bullish the aluminum sector. Maybe pop above there would take you up here to about 1590. That would be my first target. If it breaks out and I follow up on this one, I'll maybe add some additional targets. But again, not one of my favorites, but just wanted to point some of these out, share some trade ideas. This is Mag Silver Corp. There it is. Nice inverse head and shoulders. I pointed that out in GDX recently that we have a potential inverse head and shoulders. Those are bottoming patterns, and they come after prolonged downtrends. I often see people use them in the middle of nowhere at the highs of a pattern. You can draw that, but inherently these are bottoming pattern, not continuation patterns or topping patterns. It's the inverse of a head and shoulders pattern, of course. Those are topping patterns. So it's pretty well defined, and this one's poised to break out. So we just need gold. Again, all these mining stocks um, will depend. I'm talking longer term. In other words, if this one breaks out here, there's your head and shoulders. Pretty nice, well-defined, slightly downward sloping neckline. That's your measured target, which comes right into where I already had my target zone. I had these two lines here, a target zone 937 and 973. And so if it broke out soon, that would project. And all this line is the distance from the bottom of the head up to the neckline. That's how you get the measured target for head and shoulders. You add that to where the pattern breaks out. Now, this isn't a breakout in my book. It popped intraday, but so far it's fallen back below. So you need to see probably the next break above there will do the trick. But gotta be careful. Gotta watch gold. I'll do another update on gold. It's still yet to take out that 1213 level on GC. That's what I'm watching. There's a downtrend line and roughly 1213 on gold futures. And until and unless gold breaks out, you might get some whipsaw signals, especially if gold doesn't break out and takes another major leg down. Then any of these breakouts could fail, and they could fail very fast. So these are trade setups. They're unofficial right now, but I want to pass them along. You can put them on your radar. You can trade them as you like. If you want to take partial positions, full positions, but a lot of potential in these. That's why I'm passing these along as unofficial and aggressive trade ideas. But if that one plays out, you're talking about 18, 19% or so to that measured target. A couple more, and then we should wrap it up here. Let's see. That was MAG. Two more. DSX, another shipper, Diana Shipping. Diana Shipping has this downtrend line, bullish divergence, just breaking out today. Volume, mm, I'll have to calculate the volume. You want to make sure it's on above average, 1.5 times better above average volume. But if this one can get some traction, I think 444 and possibly $5 would be my targets on this one there. So pretty good potential on these. And again, it's more of a theme that I'm seeing some bullish developments in the shippers lately. And finally, another gold stock, NGD, low price. This one's only 80 cents. So see, it's fallen below that $1 share level. It's tried to regain it, fell back down. It had positive divergence. It does at this point. You can see the indicators are making higher lows, but this one may also need another thrust down. Again, it will depend on gold, what gold does as far as what these gold mining stocks will do. And I mean, there's a lot of upside on this one potentially. If it can recover that level and gold can do good, this is a company probably flirting on the edge with bankruptcy or some major cash flow issues or something here. Otherwise, it wouldn't be trading at 81 cents. And when you go back, NGD's been around forever. The stock used to be, $15 back here at the highs, and now it's below $1. So again, risk and reward go hand in hand. Keep the position sizes small. There's a big gap to be backfilled or tested possibly if this one can get some traction to the upside. And again, if gold can really recover and this company can get back on its feet, then ultimately this one might work its way up here to 264. So, one way to look at these kind of stocks, there's a 223% return if it gets there. So you put as much money in there as you might be willing to lose if you were stopped out on a normal trade. What I mean by that, let's say that you trade $10,000 normally in something like the SPY, broad market ETF, and you allow yourself a 5% stop loss. That would be $500 if you're stopped out. So you put 500 bucks in this thing, and if it goes up 223%, you've made, you quadrupled your money, and you probably made more than you would have made on that SPY trade. So that's one way to look at it, yet not losing any more in dollar terms. And again, I'm assuming worst case scenario, but that's usually what you get. If you get a bankruptcy file and these things fall down, they don't go to zero right away, but You just got to be careful with these low price stocks. Anyways, I wanted to pass those along, and I'll follow up with some more, I don't want to call them secure, but more traditional swing trade ideas against sector ETF stocks that are not so low priced. I just wanted to get these out there and give you guys a few longs. And I found some shorts as well. I'll do those in another video, or maybe just post those in the trading room. Anyways, let's wrap it up here. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.